That's a pie, by the way. Um, the title of this talk means absolutely nothing. There's no such thing as Web Pie, because there's no such thing as Web 3 either. It's bullshit. It's a scam. Um, Unfortunately, it's turned out to have been extremely powerful bullshit and an extremely profitable scam. And so the goal of this talk is basically to, I guess, in some sense, convince you that's the case if you weren't convinced already, but try to prime you for what I think is coming with scams and bullshit of this variety. So, in the spirit of not scamming and not bullshitting, I want to be quite clear about who you are, who I am, who this talk or what this talk is really about. So, I assume that you are not a shadowy super coder. I mean, you might be. Probably won't learn as much in that case. I assume that you're maybe just coming to Bitcoin for the first time. If you think that you are coming to crypto for the first time, then I think this will actually be even more useful in that case. Who am I? So I am a prolific shit poster. You probably know me more by that logo or that image, I guess, than my actual face. When I'm not shit posting, I do have a real job. I run a company that invests in the Bitcoin space. That's our logo. That's the QR code to our website. I gave the first version of this talk that I gave was actually in a private setting to a bunch of TradFi people. So I've amended it to be more appropriate here, but I'm not going to shill you a venture fund, so this is maybe not super relevant. But there will be some QR codes that I do put up like this throughout the talk. I think the rest of them may be more interesting if you want to save those web pages mostly for later. And who is this about? So it's not about people who work in crypto. And I think more seasoned Bitcoiners in the crowd might be, I don't know, mildly irritated or at least surprised when I go on to give probably about as charitable a description of those people as you'll likely to have heard from somebody like me. It is specifically about financiers, so all of this nonsense. It's about people who, in my view at least, uh, use the mostly unrewarded efforts, I think, of whether it's academics, developers, entrepreneurs, even basically to siphon money from you, who I'm assuming are potential retail investors, to themselves. So why this talk? Well, I think we're at a very interesting point in the history of if you want to call it, I guess, the crypto industry at large, such that you are about to see, I very strongly predict you are about to see a lot of what I'm going to go on to describe, but in a new flavor that will potentially seem appealing, but I want to give you the tools to recognize it and dismiss it. So what we're going to go through in this talk is why Bitcoin, not crypto. I'll give a very short explanation of this and then a slightly lengthier one. Accounts of historical scams and bullshit. Um, a Again, two approaches to explaining this. So one more historical and then one kind of theoretical that sets us up for the conclusion, which is just how to avoid them. So, what is a blockchain for? This is I think asking this question is a very simple way to address why Bitcoin, not crypto. So, I would argue a blockchain is for sound, censorship resistant, peer to peer digital money. It is not for decentralizing all the things. It is not for arbitrary computation and storage. It's not for illegal securities rackets. Um, it's for money, plain and simple. So how does it achieve that? I think the answer here is even simpler. It achieves it by proof of work and the difficulty adjustment. These are the innovations from which everything else flows. So proof of work enables censorship resistance. If somebody is trying to sell you on proof of stake, it's bullshit. The difficulty adjustment enables predetermined, fair, costly, maybe even most importantly, issuance. If someone is trying to sell you on a token that they have issued themselves for free, that's a scam. If this sounds extreme to you, then I'm sorry to say that I think you either have been or are at serious risk of being extremely scammed or extremely bullshit. And I think you potentially need this talk. Um, and I should say as well. So that's a short version, right? I'm sensitive to this maybe sounding a little bit extreme. Um, you may or may not be aware that there's been billions. I mean, probably at this point, hundreds of billions of dollars poured into X, Bitcoin, crypto. Huge amount of it is actually widely used, as I'll get onto, probably more charitably than some of you would like. And there's plenty of perfectly capable, honest people who work in the industry. Um, but I think I'm particularly well placed to comment on this, just given what my day job is when I'm not shit posting, which is basically follows from the observation that there's a huge amount of Bitcoin founders that I see who spent a huge amount of time in crypto, basically only to realize that whatever they were doing um, didn't make any technical or economic sense. And I think that's a framing that I'm going to get onto. And so eventually, I find them in the first place because they've ended up coming to Bitcoin. Um, Right. So this is now getting into the longer version. So this is my account of the scams and the bullshit. I think this is the most helpful way of breaking down the current state of X Bitcoin crypto. So stablecoins, cryptography, R&D, gambling, and scams. And I think it's quite important to realize that these are not exclusive at all. There's significant overlap here, and if anything, I think the overlap is probably the key. So scams are tokens, plain and simple, right? If somebody is trying to sell you on a token that they have issued for free, they are scamming somebody. It might be you, the retail investor. It might be the venture investor. It might be further up the chain of capital allocation. It could be further removed from that, even if it even if it makes sense to say that there's suppliers or customers. Somebody somewhere is being scammed. I think the sad thing, though, or it's kind of interesting, it depends on your perspective. I guess it depends whether you have been scammed yourself, is that it's almost never just a scam. There's almost always components of either stablecoins, R&D, or gambling. And so these are the ones that I want to pay more attention to. This is my very high level summary of how I think we should think about each of these categories. And I'll explain what I mean by this in a lot more detail in a second. So I would argue that stablecoins have economic merit, but they have no technical merit. R&D has technical merit, but no economic merit. Gambling kind of has merit. It depends how you interpret it. And then obviously, scams just have neither, right? So this is what I mean by this. And this is obviously quite simplified. It's, again, this framing of economic and technical merit, I'm going to come back to again and again. So by no technical merit, what I mean is that stablecoins have central issuers. So you can issue a stablecoin as a token on a blockchain, but there's not really much of a good technical reason to do this. You could just as easily have a database that is connected to the public internet. You can have relatively simple, cryptographic schemes for signing the transfers and whatever, and it would be basically the same thing. It would actually be cheaper and faster as well. And I think probably in particular the fact that Tron is by far the most heavily used for this, um, at least as distinguished from various other so-called use cases within crypto. That's testament to exactly this point because Tron is barely pretending not to even be a database, but it pretty much just is. And I think all of this works, or at least has hasn't been shut down basically, because regulators think that this is innovation, right? It's kind of a form of regulatory arbitrage, but they're mistaken. It's really just quite silly. Um, and I think another way of conceiving even of no technical merit is just by comparison to Bitcoin. So um, obviously, I would hope this is obvious at least to this audience. Bitcoin can't just be shut down by the action of a regulator. Um, Bitcoin just doesn't care, right? Whereas for stablecoin issuers, if you can just shut them down in 10 minutes or whatever, it's clearly not sound. It's clearly not censorship resistant. It's not really what a blockchain is for. Um, on the other hand, though, they are extremely widely used and valued, basically as a form of kind of dollar shadow banking in a way. Um, and crypto people love pointing to this, and I think Bitcoiners tie themselves in knots trying to explain this away in a lot of cases. In my view, though, I'm really just not sure that there's much of a connection at all. I mean, there's obviously a superficial connection. Hence, I wouldn't be mentioning it otherwise. But I think you can create any kind of superficial connection you want by tokenizing things for no particularly good technical reason. I think the better way to think about stablecoins is that it's a subsection or a sub industry even of payments. And for the time being, or for its history to date, let's say, it's been allowed to operate um, because regulators have been successfully bamboozled by all the things that I'm you know trying to shed light on just now. Uh, so no technical merit, but potentially economic merit. Uh, Cryptography R&D is maybe even easier to understand. So it's um, it's maybe worth giving a bit of context though that it's only really in I guess crypto at large, kind of Ethereum when you look at it more closely though, that you can have arbitrarily complex cryptographic schemes that operate on real and potentially enormous value. And so there are some people, it's understandable that that they would find this attractive, given that whatever they're doing is essentially academic and the alternative is probably submitting a paper to a journal, say, or just putting something on archive. And this is arguably, I mean, it's certainly more fun, it's arguably more interesting, more worthwhile at all. So technical merit in that sense, but then obviously the value that is being manipulated is just nonsense. It ultimately relies on either gambling or scams, and so I would claim no economic merit. um, Last one on this side, gambling is a really interesting lens to adopt on all of this, because it's a $1 trillion industry pretty much, and it's real as well, right? It's not like it's not it's not fake, it's not criminal, it's consensual, it's legitimate economic activity, and it generates enormous profits for the people who do it well. You could maybe argue that it's unethical, I guess, but I'm not sure I would even argue that. But if you did, it it would have to be a separate column, right? It's not really relevant to this analysis. What potentially is relevant, though, how you would tie it in, is that you could well argue this is a form of deeply unethical gambling, in the sense that the gamblers don't realize that they're playing a negative sum game against the house. I mean, they may not even realize they're gambling at all. They might think that what they're doing is more akin to speculating on securities. Now, speculating on securities obviously can also be pretty stupid. It can be a form of gambling, I guess, but it at least has economic merit in the sense that it's still supporting price discovery, it's still supporting capital accumulation. The difference here is that what is being speculated on has no economic merit. So, if that's your gauge of merit, then obviously there is none, basically. So now I want to get onto a historical account of all of this. That's kind of the current state as I see it. This is how it's all come about. So 2015, Ethereum launches. The narrative here is, now we have uncensorable, decentralized computation. Uh, Towards the end of 2015, we have the ERC20 standard for fungible tokens on Ethereum is proposed. It's adopted, which is why 2016-17 we get the ICO bubble. Notice, though, that the narrative has now changed. So now the narrative is Web 2 companies are big and powerful and they're gatekeepers and all sorts of other horrible things. What if instead we collectively owned our own data and participated in the upside that our usage is creating? Then 2018, 19, nothing happened. Don't worry about it. 2020, 21, now again, we have a new narrative. So people have more or less collectively realized and accepted that utility tokens don't make any sense. So you can't create artificial scarcity in something that ought not to have it, arguably ought to deflate rather than appreciate, and expect anybody to care about this, never mind even value it. On the other hand, securities ought to be scarce. You could say maybe you're pushing it a little bit, but they ought to be tradable ledger entries, sort of. So maybe it's not the worst idea in the world to try to tokenize those. So that's why we get DeFi Summer, this blossoming of decentralized finance. Which, by the way, QR code time. Me and my co-founder at Axiom predicted in 2021 was going to be a complete and utter disaster. So this is the title page of a paper we wrote at the time, Only Strong Survive. It's QR code to where this is hosted on our site. And we were absolutely right, because in 2022, all of this collapsed, right? Terra Luna kicked it off, and then you get Voyager, BlockFi, Celsius, whatever else. I forget the rest of them. If Only the Strong Survive was like a pre-mortem of this, we then wrote this this post-mortem after FTX finally collapsed, Green Eggs and Ham. And so now all this stuff is moving to Bitcoin, um, or apparently is moving to Bitcoin. I'll get on in a minute or two just to whether that really makes any sense or not. Um, I wanna think about this from, again, going back to this framing of technical and economic merit, or alleged merit. Ignore for now whether there really is any merit. So we start off with this new method of computing, right? And so what's the addressable market there, right? Is probably some percentage of global GDP, if it meant anything, which it doesn't. Uh, but then um, for the ICO bubble, it's becoming more specific now. So now we're merely disrupting how we organize companies, and so what's that potentially worth? Well, maybe just some percentage of whatever companies are vulnerable to this coming wave of decentralization, which can be turned into dApps. Um, Nothing happened then. Don't worry about it. So DeFi, again, it's more specific. Now it's just financial contracts that we're moving into this paradigm. So now it's probably some percentage of capital markets activity, I guess. Nothing happened then. Don't worry about it. And apparently now it's on Bitcoin as well. So there's a couple of things to point out here, I guess, that are interesting about this. I think the most amusing thing is that this starts off, in terms of how it moves through time, right? It starts off just completely insane, right? This means absolutely nothing. What's at the top? As it progresses, it becomes more restrained each time. You can maybe cheekily argue that it starts to make a little bit more sense, at least, but as it gets closer and closer to Bitcoin. So it's clearly, in my view, just converging on Bitcoin, right? And I think this is people realizing over decades at this point what a blockchain is for, right? It is not for decentralizing everything. It's for sound, censorship resistant, peer to peer digital money. And I think this also explains or helps us understand at least the current state of crypto, as I mentioned before. So as all of this converges on Bitcoin, you start to have realizations like the following. So digital gift vouchers for artificially scarce and extremely expensive computation are clearly not money. So if you want this thing to have economic merit, you need some real money in there, and I think that's why you get stablecoins. Equally, we now have this this novel computing paradigm, very technically new, at least, it is interesting in its own right to some extent, but the severe handicap of being unable to do, I don't know, a billionth of a billionth of a billionth, or however many times you want to say that, of all of the computations in the world. And so you get cryptography R&D to try to fill that gap. And I think these are very well understood as like short-term patches that maybe have some merit in isolation, maybe not, but again, I'm trying to give them the benefit of the doubt. But in the meantime, everything is just going right past them and converging on Bitcoin anyway. So going back to this chart, there's 3 points I want to make about this, and then this gets us very nicely to the end of the talk. So the first one is that it's pretty obvious from this that the bubbles follow the price of Bitcoin, right? Hopefully, I shouldn't need to put up a price chart for you to just be able to see this. Kind of realize it's pretty obviously true straight away. The second point is that you notice that the narrative always changes, right? I kind of alluded to this, but I didn't want to hammer it home until now. Um, Absolutely ridiculous amounts of money was raised for this crap following the Bitcoin bull runs of 2017 and then 2021. A huge amount of that value was presumably destroyed, right? There's nothing useful. It has come out of what it was nominally put into, and so the people doing it need a new narrative, right? The third point, though, is that completely regardless of what the new narrative they come up with is, a consequence of it is always buy my token. Always. It doesn't matter, what else they say, whatever buzzword salad is in the middle of this. It's always Bitcoin is cool, XYZ, whatever, Fugazi, buy my token. And so this is also, just very quickly, this is why I'm somewhat tempted, I guess, to not be too mad, at least, at the likes of, whether it's developers or academics, because I think if you appreciate this dynamic, you you figure out who is really to blame from all of this, I guess. And this is the um I guess the crescendo of the entire presentation, which I'm pretty sure the next slide is word for word. Yeah, I wanted to put this up so that I didn't have to memorize this. But I think when you understand all of this, you realize that this dynamic is really what drives all of it. It drives everything that you end up seeing that I'm warning you to stay away from. But and I'll read this because I think this is important. The entire cycle of shitcoinery can be traced to unscrupulous financiers convincing capital allocators who don't know any better in a Bitcoin bull run that yes, Bitcoin is cool, but that what they are doing is related to Bitcoin. That's important. Cooler. That's also important. And that they deserve a fee. Now, remember, originally this is me begging TradFi people to not give money to them. That's this is where I came up with this to try to nudge them in that direction. Um, but explaining it to you guys is maybe even more important because you are potentially the closing the loop on all of this. You're the exit liquidity that they need to tie it all together. So on to avoiding them. This is super simple in your case. So when I gave this talk to the TradFi guys, I had to be a lot more nuanced about how I expected them to be pitched this bullshit. In your case, extremely straightforward. I think maybe jumped a slide or put them in the wrong order. Um, Oh no, yeah, sorry. The the answer is just buy Bitcoin. I think that's the next slide. Yeah. So just buy Bitcoin. But I did want you to appreciate why this is happening now at least. So as mentioned before, ridiculous amounts of money have been raised and have been put into this. At the same time, we're starting a Bitcoin bull run. It seems is likely the case. And so I strongly predict that not only will all of this shitcoinery return, but more importantly, if you remember the narrative evolution, it's very likely that it's going to be presented as having something to do with Bitcoin this time around. And that I think is why it's happening now. The solution for you guys, though, is just buy Bitcoin, right? Just completely ignore these narratives to the best that you possibly can. Um, do not be bamboozled by technical sounding nonsense like Web3, or probably nobody will actually say WebPi, but you never know what they'll come up with. Um, be mindful, be aware, the bullshit is coming, but if you guys can be zen, ignore it, stay humble, stack sats, you should be fine. So good luck with that, and thank you very much.
We might have time for questions.
Oh, sure. Yeah.
I think we have time for questions. If anybody wanted to, is my mic on? Can you hear me? Yep. If anybody had any questions for Alan, we can just throw them at him before we jump to lunch. Yes. So can all coins, all altcoins be categorized as shitcoins?
I think so. Yeah. There's. I can maybe give a slightly more interesting answer. So hopefully this this kind of captures more the moral of the talk than any of the details. That with all of this stuff, you can take more of like an academic view, like an intellectual view, and go into the weeds of it. And I to some extent I have to do this for my job. It's like why I know a lot of the things that I ended up explaining. But I think the easier approach is just ignore it completely. I think that's a very valuable heuristic if you want to. One kind of amusing way even of summarizing that entire talk is that you can just skip the first 90% of it and just buy Bitcoin and then that's the end of it. This is I wanted to present that more so that people who are in the camp that might be tempted in the first place sort of understand why this is all happening. But if you don't feel the need to understand it, then that's great. That's you just save yourself time.
Any other questions for Alan? Yes. How would you raise money if you needed to build a business
Do you
in
mean
Bitcoin?
Do you mean one that has something to do with Bitcoin or just anything? Hmm.
How to ethically raise money to build like a Bitcoin business? Yeah.
I don't think I have any particular insight there. I don't think there's I don't really think there's a bad way of raising money if the people providing it are fully informed and consent and so on. As long as you're not defrauding your own investor, I don't think it really matters if they understand, the contract they've entered into. I think the problem is that, at least the problem with what I was describing is that the implied means of exiting the investment cannot help but be fraudulent. And so it almost doesn't matter how this stuff raises. I mean, it's been pretty straightforward, and historically, the bigger projects, what they've done, right? They've just taken money on the promise of issuing, um, issuing tokens that they intend to later float on exchanges and dump on retail, issuing them to the investors either for free or at a much lower price than they intend to list them. I think that's the component that's unethical. Raising money is fine. I mean, that's kind of if I didn't, I'm an investor, so if I thought raising money is unethical, it'd be there'd be an odd conflict there. Oh, do you want to
Yeah.
repeat that?
But are there potentially good tokens coming down the?
So that I mean that links to my previous answer quite nicely. I think if you want to be super academic about it, yes, potentially. If you want to just save time, no.
So I got a question.
Yeah.
You obviously went around to all of these traditional finance guys that are investing,
Yeah,
or
yeah.
they're being pitched by crypto
Yeah.
bros, right? To come invest in our Web3. When you go into that room, into the boardroom, and you show them this, and you try and warn them of what's going to be coming, the kind of people that are going to be coming into their boardroom, the kind of language that they're going to be using, what do they give you feedback on, like, oh, thank you, you've saved us, or like, or we got scammed on this? Like, are they understanding where you're coming from your?
Yeah, that's a really interesting question. I haven't given this talk or had that kind of conversation, I think, enough times to have a good representative sample. But um, I have spoken to people who have had similar reactions to that, even without hearing it from me necessarily. And I think, yeah, there's a growing cohort of people in TradFi and the various capital allocation rules who are extremely pissed off about all of this because whether it's 2017 or 2021, they bought it and they've seen, even if they don't necessarily understand it to the extent that I tried to set up here, they just see the returns. They're like, oh, why are we down 98%? I thought you said this is the future, something like that.
Right. Don't buy shit coins, kids. I think
Yeah.
we got a question here. He identifies as layer 2.
Yeah.
Alan, what is your thoughts on layer 2?
Okay, so
On
I
the
don't know
layer
if this is even what you mean by the question, but I'll give two answers. So the answer to what I think you mean is I'm bullish. I guess almost everything that we invest in as a venture firm, touches some layer two in some or other way. The more amusing answer, though, that ties in with the presentation is that um, I didn't want to go this much into detail on it because obviously I had limited time to talk about it. But if it were like an hour long, or if it were an essay or something rather than this, I would have further spelled out that the bullshit way the new scams are going to be marketed is mostly as layer twos. So that's, I don't know if you intended that or not, but that is a good way to further prime you to how to be wary of this stuff. That more specifically than just like, oh, built on Bitcoin, they're going to be, oh, this is a Bitcoin layer two. Here's our token that powers it, or governs it, or gives you some cash flows from it, or whatever. But uh yeah, that don't shitcoin kids is bad for you.
There was a question here.
Hmm. 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 Do you want to repeat?
Yeah.
Yeah.
So, to sum up your question, is there anything coming on Web3 that, with a decentralized nature, would add value to something else rather
Sure.
than?
Yeah. 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 I think absolutely, and I think that's why it was it was a worthwhile exercise for me when I was putting together this talk in the first place, to try to steel man it, right? To try to give it as much benefit of the doubt as possible, so as to not. I mean, there's nothing wrong with this, to be clear, but what most Bitcoiners will do is just be like, "This is all bullshit." At the end, which is fine, by the way. But obviously, that would be like a 10-second talk, and not not going into more detail on it. So, I think oh, the slides aren't up anymore. That's a shame. But there's a slide that is, I think that's just cycling through some. Can we get the slides back up? Yeah. So but also what I was talking about at the time here, that the assumption in the content that I wanted to cover here is that these people are not scamming or bullshitting. That's why I took off gambling and scams. Um, and I think there is a huge amount of that in crypto, of people who are really are well intended. They're trying to build something useful, and I think what I said in the talk was something like, they'll eventually realize that they'll probably have to bring it to Bitcoin to find the missing merit. But I think in particular the bottom row, the cryptography R&D, because you said you want to disregard the financial part for now. Yeah, there's it seems at least pretty obvious that there's massive technical merit, and if anything, this has been a bit of a struggle for Bitcoin, because historically, um, the the people who I blame for all of this have done a far better job marketing. I mean, it's easy when you have a $1 billion budget because you're scamming people, but nonetheless, they've done a far better job marketing the appeal of working in the space to, like, academics, developers, and so on. Who, again, I've said, if you want to give them the benefit of the doubt, I think I've been scammed as much as anybody else. But that a huge amount of the work that they have done seems like it potentially has applications, provided it can be brought to Bitcoin, because that will fill in the missing economic merit component. I think, I mean, you could have a whole talk about that. That probably I wouldn't even be the right person to give. Um, but yes, if you're not minded to just be like, bullshit, scams, ignore it completely, I think you'll start to see a lot of this too. Um, and I think maybe I actually didn't really mention this because this is now getting very nuanced, but I think that will be a pretty major difficulty this coming cycle for people who want to try to look for this sort of thing, that distinguishing the the combination of the real projects with the real technical merit and credibility, and also the ethics of the team, right, that they were never really intending to scam anybody. Distinguishing that from the the answer to your question, which is is like, oh, it's a layer two, buy my token. That's probably going to become different. I mean, if they have a token, it's a very easy way of siphoning it out. But expecting these people to move over to Bitcoin and to find ways to implement it in that context, I think is obviously gonna happen. But to go right back to your question, that yes, there's a huge amount that has some merit, is well intended, but simply won't work in crypto for hopefully reasons that are now clear. Hopefully.
All right. Well, thank you, everybody. Thank you again,
Cool.
Alan, for
No, that's right.
the presentation.